Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening as we're sitting here now on March 7th, 2023, and what a day it was, right? It's 6 p.m. at night, and we saw the Fed chair go in for his first of two sessions on Capitol Hill. Today was with the Senate, tomorrow's with the House of Representatives, and he just laid it out the way it is. Very simply put, service sector is rough. And the Fed has to keep going with interest rates as long as it stays that way. It's not going to be easy. It's going to take a long time, longer than the Fed thought. While the market interpreted what he said, they're going to immediately go to 50 basis points because if you see the CME FedWatch page, it went from like a 35% probability to a 70. That's really not what he said. What he said is the data. They have to look at the data. We have a lot of data coming up right now. Just think about it. You're going to have in the data immediately in front of you the JOLTS, the ADP, and the jobs report. Three pieces. All right, what if they come in soft? Nobody knows, not yet. And then next week, I think it's Tuesday, we get the CPI data. Now, if that all comes in strong, the odds are really strong. The Fed's going to have to pick up the pace here to make sure that things stay slow down the way they want. He did talk about rents coming down slowly. They're coming down from a peak. They haven't really gone under where they're at. And I find that interesting because he knows that, but he didn't want to actually say it. The market understood that. And the market gave you today what I won't call it wasn't a crash, but a big break. Anything priced in U.S. dollars got slammed. The gold market, the copper market, the silver market, the energy markets, the grains got hurt. Not dramatically, but hurt. Everything in dollars. So let's go see what I mean by that. If you take a look at gold, you are fighting right where we talked. You're right at, for all purposes, the 18-week average. That number comes in at 18.32. You're lower by $14. You're 18.20. Okay, but it's only going to be Wednesday tomorrow. It can get worse. It can get better. I don't know which one it's going to go to. When I go to the daily charts, it looks as though we had that rally, and now we're getting a break right back into where the market was. So once the market cleared that low, and I'll come back to that for you so you can see it nice and clear. It's real easy to see. Once you got under that, that broke this pattern of the bullish rally. You can see it right through here. And that sets into place that the traders run, the stops get hit, whatever's going to happen. When you look at where the battle was, do you deny that it was an 18-day average of closes? The first break close held back here at the 100-day average. You did miss the 200. You rallied then in what do we call that kind of rally? We call that kind of rally a bear market rally because at that point you were under the 18-day average. You got over it for 2 days, and yesterday, I know I was saying, hey, if this, oh, by the way, I don't think you got your update yesterday. We had a serious electric issue. It took me out of play this morning, too. We had electricians here, the city, it's all fixed. So I've got everything back. I thought it was us. It wasn't. It turns out that we had a big problem out in my front of my yard with electricity, and it turned into a bit of a nightmare for a while, but it's all fixed now. In any case, higher highs, lower lows, the trend is over. And what I did say, because I did shoot last night and the voice didn't come out, is if this low was taken out, beware. That would be your warning sign that the market's not ready to hold up. That's what happened. Are we bearish? No. You got a higher high, lower low. You're not in bear territory at this point. When you look at momentum, you're oversold. So the first attempt at a rally is a failure attempt. At first it worked, then it gave it all up. When it gives it up that fast, other problems are there. I don't know what the next leg of gold wants to be. When I look at the gold-silver ratio, silver is still losing the gold. It just keeps moving out. It was the other day when we talked 88, now it's pushing 91. And if you look at silver, this is a new break low for the move. So that really gave ground. It isn't embedded, but if it does, there'll be more downside to pay. So what traders looked at today, and they said, if this Fed's going to keep going, it forces everybody's interest rates to match the Fed. That's basically what happens in the world of parlance between central bankers. We're the giant in the room. Now you'll hear bankers say, like in Canada, Australia, or even Bank of England, nah, we want to come and end this. Okay, they all have to look at their own economy. But the strength of the dollar creates issues for them if the dollar keeps going up because interest rates are marching higher. There'll be a point where higher interest rates create the recession. Remember that. That's the inevitable, and I use the word inevitable, result of raising rates high. What is high? I just looked to see where they had to go under Paul Volcker, 19%. I didn't say that wrong. I didn't say 19%. So this is an interesting event. The 2-10-year spread, so you'll know, is out to the point where I think it's 103, and that's your recession number. In June here, go back, our YouTube things are up there. I thought you were going to go to 100. You're at 103. So I feel that I did my job long term. All right, but right here, I don't know what to do with that market. Copper, caught, and I said it would probably be caught in the sideways action here, and it is. It tries to get bullish, it doesn't go. It tries to get bearish, it doesn't go. It's oversold, it gets overbought right away. It's not tradable just yet. In the platinum market, up until today, this market was marching higher, and you can see the good action that it was having, but it was overbought already. Could it get to the upper Bollinger Band on the 100-day average? That would have been the question. But I would have still expected the resistance to show there. And the market, as you can see, today's high was on this day, 983.70, the Bollinger Band 985.90. I wasn't too far off. And now the market just took out that low. You got nothing. This is a good time with what do you do in the metals? You take your hands, you put them in your pocket. You don't get jumpy here. You got another day of the Fed. You got the JOLTS data tomorrow, the ADP data. You don't do anything. The setups aren't here. You can do whatever you want, but that's what if you're paying me to coach you, that would be what I'm saying. In the dollar, you fell back, held the 18-day average and an outside day up into overbought territory. Do I think you're just going to run from there? I really think you're in key resistance. You're at the Bollinger Band, the 100-day average. If you go a little higher, be the first time you've challenged the 200-day average since the beginning of the year. Doesn't mean you can't keep going. Depends what's said, what comes out in these reports, and everything that's tomorrow gets a pause on Thursday, so to speak, until 7:30 in the morning when we see the jobs report, and then it all starts again because now we'll start saying whatever that means, and then we'll have to think one more time to Tuesday to CPI. Then the big guess is the Fed a half or a quarter point. Just walking you through how things are going to work out there. So as I'm doing them, I'm going to have a ball in the morning. And what do I mean by that? Now that I have my electricity back, I'll be able to put out, and I did this morning, I got my futures out before the electric company showed up, and that was done. But I couldn't get my ETF ideas out. I did them at noon. If you know anything about me, I put out, I make up time. If I go on vacation, unless my wife drags me somewhere, I'm going to go there and play with this and give you ideas as to what to do. So you wake up in the morning, you hear what's coming on, how'd Europe do, how'd Asia do, where we at. And then after the futures, I do the ETF video typically, start recording that at 9. Today was the exception, big deal. I did it at noon and the trader saw it, or 12:30, whatever time I did it. You get the trade ideas out of it. You see what's going on. I build the trades with you right there. We cover these sectors in futures, 40 of those, and then ETFs. We cover this plus the individual stocks that I typically rotate. So everything moves around a lot. How do you get involved in it? It's simple as can be. And I mean, when I tell you, it is simple. All that you need to do is either take your cursor up here. It'll take you right to the area on our website. You can go to iraepstein.com under the word research. You call my staff. They can work with you, and they'll get you all set up. Do it. Can I be any clearer on that? I'm Ira. I'll see you tomorrow.